Hello, or welcome to the LCG's look ahead to the key events in markets for the week starting December the 12th, 2016. Now, this is perhaps the biggest week of the year for central banks and could set the tone for the US dollar and stock market in 2017. On Wednesday, the US Federal Reserve is expected to raise rates for the first time in 2016. Then the next day, on Thursday, the Bank of England will set monetary policy. Now, policy will be set without knowing the result of the UK government's High Court case appeal on triggering Article 50 in order to leave the European Union. Now, the first point to make on the Fed meeting is that a rate hike is pretty much guaranteed. Fed funds futures have the odds of a 25 basis point increase at 100%. As is often the case, Fed Chair Janet Yellen's press conference will likely be more important than the policy decision itself. Now, the Fed will also release its quarterly economic projections for growth, inflation and interest rates. Another huge consideration is that this is the first Federal Reserve meeting with Donald Trump as US President-elect. Trump's reaction, or lack therefore of, will impact the moves in markets. The Donald has previously suggested that the Fed suppressed interest rates for political reasons, even saying that Janet Yellen should be ashamed of herself for doing so. At the same time, he has described himself as a low-rates guy. Now, silence could imply Donald Trump will endorse Janet Yellen for a second term as Fed chair, but criticism would make a Yellen second term very unlikely. Yellen as Fed chair beyond 2018, when her current term ends, would presumably mean a lower path of rate rises than if Trump were to appoint a hawk as her successor. Now, we believe criticism from the Donald would lead to a stronger US dollar and a steeper yield curve. The other Trump factor for this Fed meeting is actually the prospect of higher government spending next year. Fiscal stimulus should mean higher inflation, so markets are pricing in more aggressive monetary tightening, with 4 rate hikes in 2017. Our expectation at LCG is for 3. Economic projections at this meeting are unlikely to factor in the fiscal stimulus until it is actually agreed by Congress. Now, given that it's the Fed on tap next week, let's look at a chart of Wall Street. This is a daily candlestick chart of Wall Street, and the trend has turned parabolic. The price is overdue a pullback, but there is no evidence of a top. Now, the index is at record highs, so the round number at 19,700 is a near-term resistance. Any pullback could find support inside the rising wedge pattern highlighted in purple near 19,280. There's no doubt the Bank of England meetings have been more interesting since Brexit. Now, a resilient UK economy measured up against Brexit uncertainty means that the Monetary Policy Committee is likely to keep rates on hold in December. The MPC will be especially cautious given the proximity of what should be the Fed's first rate hike this year. The British economy has kept up its positive momentum into the fourth quarter, according to survey data and the rise in the pound, which means there could be less of an inflation overshoot beyond its 2% target. There is also UK inflation data, unemployment data, and retail sales data reported this week on Tuesday, Wednesday, and Friday, respectively. Let's take a look at the British pound, which should take centre stage as the Bank of England meeting takes place. The cable rate is correcting within a bullish trend supported by the blue rising trend line. A confluence of potential support comes in near the round number 125, the rising trend line and the high from November 20th. Resistance could come from 128, which is the July low, and near the recent peak in December. On the company earnings front, there are reports from Dixons Carphone, which could include an update on Black Friday sales, as well as Carnival, which is suffering from concerns of a supply glut of ships in the Caribbean. And also we have Oracle after its $9.3 billion acquisition of cloud computing firm NetSuite. Now, that's all for this time for the week ahead, but join us next time. Goodbye for now.